When you started, what was the kind of one thing that you kind of found more challenging than you expected?
I think in any business, cash flow is a major issue. Probably most businesses would end up unfortunately liquidating for lack of cash flow. And I think probably naively, as I say, we initially went with £1 million, and I thought that this would be enough to get us buying a lot of property for a couple of years. But after probably 4 or 5 months of trading, I realised that that's going to get eroded quite quickly. I say I was very ambitious, tenacious. I had a lot of existing relationships, and I was relentlessly working in relationships, all day, every day, trying to find and source deals. And I quickly realized that I was going to be able to actually source a lot more opportunities than I first thought. As a business owner, I'm sure you get a lot of self doubt, and you think actually the daunting prospect of going from earning a very good salary to no salary, and actually the world's your oyster, and you sit there with your software and your contact book and think, right, I now need to go and make money and make this work and quickly get my income up. It was a quick learning process. I think one of the things for us, I remember just sitting there with a load of paperwork because I didn't, at the time, our business very old fashioned. We didn't have CRM and things like that at the time. I wasn't aware of Salesforce. I used to do everything from Microsoft Office applications, Word and Excel. So it was sitting there with hundreds of leads to call that were on paper form, and it just was very scatty, unfortunately. So I think it was just a quick learning process of we have to systemize, get our processes in place, get a workflow, and that would help us streamline the business.
Yeah, I think as well as when you start from zero, you don't have any systems in play at all. So you do have to create everything. And on the cash flow side of things, it is hugely underestimated how much cash you actually need to run a business, especially when you've been on a salary basis. But obviously, you overcame that challenge.
Yeah, exactly. In our business, it's firstly buying property is very capital intensive, but secondly, we was in a very competitive sector. The property buying sector, we had some very strong competition who had been in business for many years. Had very strong balance sheets and market dominance. And for us, we had to go gain an entry into that market. So that involved a lot of investment in the brand, a lot of PR, a lot of marketing, a lot of advertising. And I loved, my background, I loved marketing. I had a real interest in it, I had a passion for it. So that helped because it was something that I already knew about. But it meant that we had to invest a lot more money than I probably thought in order to gain a market share.
Yeah, and obviously those established players as well were already gonna get a lot of the business that was already there effectively, so you were kinda trying to take it from them as well as growing into the brand. The capital raising side of things, how did you go about raising more capital once you realized you needed to?
Lucky I had some very, friendly and helpful, supportive shareholders. So it was, can we go for lunch? I need to have a chat. That was one of the things. But I had some really good relationships with banks that I'd been working with, and say in previous employment that I built up strong relationships with. So in property, you've got very many different ways. It's all about leverage. So you have your equity slice, and you can leverage that by getting mezzanine finance, by getting bridging lending, by getting mortgages, etc., and ultimately just leverage your equity. So I thought, well, how much do we actually need? We're going to probably 1 million was spent within 4 months, so probably need at least 3 million. So how much more equity can we get, and then how much debt can we raise with that? And most lenders, an average is about 75% loan to value. So we'd put in 25% equity and then 75% debt. So as just in basic terms, buy a property for 100,000, you need 25,000 cash plus your soft costs, stamp duty, legal fees, etc. to buy, and then you raise debt finance from a lender for 75,000, and that enables you to buy that property because that will enable you to massively scale the property buying as opposed to buying 10 properties at 100k with £1 million investment. So we sort of went from there and worked out the best fundraising plan. And then I raised some additional capital from the shareholders, And then from that, we went to lenders and agreed a facility to be able to use their debt funding to be able to sort of leverage the equity that we had.
So on the marketing side, you've touched on that, you know, that's a really big part of what you did in the beginning. How did you go about generating your first customer?
So at the time, before I had the business, as I say, when I was setting up, I say this was 10 years ago. So I was, a bit fresher at the time. Probably had a little bit more energy than I do now. But it was. I used to even, at weekends, go and distribute leaflets in sort of local areas, put leaflets in shop windows, walk the streets on a Sunday, put leaflets through letterboxes. We used to do sort of advertising in local newspapers and also a lot of Google SEO, so the search engine optimization marketing. So I used to write blogs, spending the evening writing blogs and brand awareness that way. So it was a lot easier. The algorithm was a lot easier to understand probably 10 years ago as well. And things have changed there. It's much harder now to get page one market presence on search engine optimization, especially in such a competitive industry. But as I say, I used to just invest a lot of time, money, and energy into that brand recognition and building up, leads onto the website organically. I think we started out probably with a marketing budget of about 5,000 a month. That budget today is £65,000 a month. So and that and
It's
Abe
grown exponentially.
exactly. It's even more like most businesses now, significantly more competitive than it was at the time. But also with inflation and now such a more broad range of marketing channels, we've had to invest a lot more heavily, but also a lot broader in our approach. Where we used to maybe focus on 3 channels, we now focus on 50 channels.
Do you get involved with any content marketing? So obviously we're on a podcast today, but do you do your own YouTube channel? Do you have TikTok? Do you do any of those kind of mediums as well to get customers?
It's all about in business, I think, focusing on who your audience is. So you need to understand in some industries, if you feel you have a younger audience, personally, my opinion is that is more focused towards the likes of Instagram, TikTok, and other social media channels. For our market, we're buying property off people, and therefore it's the most important decision of most people's life, selling your property. So our typical audience is someone aged 50 plus. Frankly, most of our customers wouldn't use TikTok. So we have to look at other channels which are best suited to that market. We do a lot of content marketing. We've written hundreds of blogs on the website. We do lots of PR. We produce lots of in-house content from our data. And as I say, we've done a lot of digital sort of on-page marketing.
Yeah. So a load of different avenues, but like you said, targeted to the actual customer that you're looking for.